Hello and welcome back to Building Wealth on the Go, a podcast by KLT Wealth Management. Today is November 18th, 2024, and we are back with Season 5, Episode 9 of our podcast. I'm your host, Brad Wilson, joined by my colleagues Joe Filimeni and Courtney Beach. Today, we are mid-November. We are not far away. A lot of people got their countdowns to Christmas already up and rolling. It's just an exciting time of year. The weather's getting a little colder. And we've got lots to talk about. So today we're going to get into some really relevant topics post-U.S. election, a lot in terms of policy, what economic policy is going to be rolled out in the next little bit. And the big sort of headline one post-Trump victory is that of tariffs. So we're going to dive a little bit into tariffs today. So Courtney, why don't you kick us off with a little bit of a tariff 101, we'll call it.
Yeah, so basically, when a government puts on a tariff, they'll pick industry, a sector, or a product that they want to put a tariff on. And the idea is it will inhibit for instance, in the US, if the US was to put a US tariff on, it will prohibit companies from buying that product overseas. The idea is to stimulate people buying within the US. But when the tariff is charged, let's say on steel, for instance, it's not Canada that pays the tariff, it's US companies that pay the tariff, and then they'll pass that cost on to their consumers. And what usually happens is if they put a tariff on steel, is that the Canadian companies will usually put a tariff on something as well to kind of counterbalance. That's often what happens, which leads to what we call tariff wars, where different countries start putting tariffs on different things and sort of a retaliatory moves to stimulate their own economies. So that is what we're possibly looking forward to. If Trump does follow through with all these tariffs he's been, talking about.
Yeah, well, and Joe, it wasn't long ago, we were talking about the pros of globalization, and now we might be entering the world of tariff wars, right? It's quite the 180 spin from where we were maybe a decade ago.
I think it's been really clear from Trump, even when he was president a while ago, it's all about protectionism, and he's trying to protect the U.S. economy and the U.S. businesses, and I guess we have been sort of such a globalized, world, in which case that we are going offshore and making things, US companies are making things offshore. It's cheaper, keeping prices down, and just, consuming more and more. And we did see a bit of this during, right after COVID, because if you remember, after COVID, a lot of our supplies were stuck in a lot of these countries that they hadn't quite cleared the COVID, hurdles yet. And so then that created a lot of issues, which just kind of instilled in a lot of people that, hey, we should be not doing things offshore anymore and bring everything back in-house and whatnot. I think with the Trump administration, now that they have sort of a mandate to kind of move forward and start adding these tariffs, as Courtney indicated, I think they're gonna create a lot of chaos in the supply chain, and potentially, I think where it's gonna head is more inflationary pressures, which we've been trying to kind of bring down the inflationary pressures. So this will probably put things in sort of a stall move. That's what I would think.
Yeah, I think it's interesting because, Trump ran on a lot of promises, as every politician does, but he said a lot of different numbers, a lot of different figures, tariffs of 60%, 100%, 10%. You heard lots of different numbers. I think when it actually comes down to it, he's going to be a little bit more cautious because he knows, I think, deep down the implications of it, because part of why people flocked, I think, towards him in the election was the cost of living for the last few years. And if the first thing he does as president is impose tariffs that jacks up inflation, we're going to be in for a bit of chaos, right? Of people say, hey, I thought it was expensive a few years ago, and look at it now, right? And we're just at the point where they've started cutting interest rates in the US. that these tariffs could cause a bit of a wedge in the plan of the U.S. Federal Reserve.
Yeah. We haven't really talked about tariffs, like, because they really haven't been in existence for, like, again, I remember them as in my younger days where tariffs were sort of impacted. And back then I remember the US placing tariffs on the softwood lumber industry. So of course, Canada is full of trees,
Mm-hmm.
and growing up near Thunder Bay, we had pulp and paper factories, and the mainstay was really to ship the softwood lumber or the pulp down into the US, which then typically got finished, and then we brought it back as Kleenex, essentially. So, back in that day, because we had such a supply of that resource, there was taxes placed on the softwood lumber entering into the U.S. That really hurt Canada and the softwood lumber industry, and a lot of the small towns up in the northern Ontario areas, as imagine too out in BC, that were impacted by those increased tariffs. So it does, there is a protection part of it. We have to kind of look at what Canada does in their milk and quota system, the
Mm-hmm.
supply management, which is something that Trump has is initially had targeted in his last administration. And it's probably a good chance that he's going to say, okay, if Canada, if you don't want us to put tariffs on this and this and this, you need to drop your supply management. In which case, then they can flood our markets with things like, like milk, and they would like devastate our farming industry, probably because they are huge producers on the milk side. So yeah, interesting. Typically, I think it's a give and take in this, and that's all part of sort of trade negotiations that we've talked about. It's all about sort of a give and take. The unfortunate thing, certain industries are the ones that are going to be taken. So how that sort of all pans out in the general market will remain to be seen.
Yeah, you had two good points there, Joe. One, uh, when it comes to the trade between Canada and the States, is when a final product gets produced, it's gone past the border sometimes several times to different companies to finish off that product. So it does raise the question, okay, what are they going to put a tariff on? Do they put it on parts of those process? Because the more times that tariff is applied, the higher the price for that particular final product is. So that can get a little bit tricky. The other one is that we are due to renegotiate what was formerly NAFTA. Now it's like the US, Mexico, Canada agreement or something like
Mm-hmm.
that in 2026. So it piques my thought that maybe this is like Trump's way of kind of, okay, well, he'll hit us hard now so then we can renegotiate that agreement and he'll be in a better standing to renegotiate agreement, because he's done some stuff like that before where he'll hit us hard and then he'll, kind of pull it back when we actually do the real thing.
Yeah, I think that's a good point, Courtney. Another factor into that is we don't know who's going to be prime minister at those negotiations for Canada. You've seen, I know Pierre Poilievre's come out with saying he'll fight fire with Donald Trump if Trump comes hard hitting with tariffs on Canada. I know Trudeau hasn't spoken very fondly of Trump in the past either. So there's likely to be some tension for sure when we get towards that negotiation. I think the U.S. is they'll be smart. Trump will be smart with some of the Canadian tariffs. Like I know a lot of people are predicting he'll kind of stay away from the oil sector with regards to tariffs, and he'll probably pick and choose, like you guys mentioned. And Joe, that milk sector, that dairy sector, might be one that does get picked apart again, like you mentioned. But it will be interesting because we're going to have a whole political election and situation of our own next year that's going to be likely leading towards a change. I mean, if you look at the polls here, it's a lot more of a disparity than it was in the U.S. Being that we have a multi-party system here, it's not just one or the other. That we are looking likely at a change of government in Canada, and so how that impacts these tariffs, you have to think that Trump and his administration are considering that fact as well.
I thought it was interesting in a recent interview that Trump had sort of indicated that, well, John Deere, the big tractor factory manufacturing company, was basically talking about moving some of their manufacturing uh, down to Mexico. And
Mm.
he was very clear in saying that if John Deere moves down to Mexico to make these things as they cross the border, he's going to slap 150% tariff on that. So, so if you're sitting as the head of John Deere, and thinking, okay, and John Deere has always been sort of a brand name for the farming and stuff. And I think
Mhm.
that there are a number of competitors that are out there, right? They're competing against John Deere now. But so if you are serious about hanging on to your market share, you don't want to disrupt too much and give people a reason to try a substitute from the brand name,
Mhm.
because essentially that's what's going to happen is, like, the brand names, if they do tend to go offshore on their manufacturing and get hit with tariffs coming back in, the consumer will begin to change their buying patterns, and they will look for that substitute that's a little bit cheaper, but same good product, right? And so I think we're going to start seeing a lot more of that happening. And certainly it's going to, in one way, I kind of think it's a good idea. Like, that it's going to save those jobs in the US that are working at John Deere. It's going to save, those communities where John Deere is positioned, and it's going to save that community because it probably brings a lot of employment and economic activity for those small little communities.
Mhm. But at the same time, I've already heard murmurs of certain companies notifying their staff that they're not going to get their bonus this year because they got to prepare the money for tariffs.
Mhm.
So, it's going to be a give and take.
And that's where
That
the
to me is always an interesting thing, right? Like, are they just kind of, it's in the news, it's this, that, here's a great idea to kind of defer, profit sharing or bonuses and stuff because we got to tighten our belt and stuff. So who ends up paying, really suffering from this is really the employee.
Well, that's the end of the day. Is okay. So we talk about these tariffs. We understand that it's only going to be inflationary in the country who's imposing them. Well, who ends up footing the bill? Somebody's got to foot the bill at the end of the day. More likely than not, these big corporations don't want to foot the bill. They're going to pass it on to either their employees by cutting any bonuses, or to the end consumer. And I think, or both. Yeah, you're right, Courtney. And I think that's where we're going to see. It's going to be interesting to see the fallout because I don't think he can rush into some sort of high tariff environment on a lot of industries when we've been fighting an inflation battle for 3 years. And we're just starting to see the kind of the light at the end of the tunnel when it comes to inflation being under control.
Yeah. So how are we going to combat that, right? So if we follow this through, so now there's tariffs on products that we're buying, so it's at a higher cost. The central bank has already reduced interest rates, so it's kind of losing its power to
Mm-hmm.
help in the control of inflation. So inflation will continue to go up just based on the tariffs. Well, that's going to put pressure on wages to go up at the same time, because if I'm working in the factory and all of a sudden it's costing me more to live, Well, my union is going to push next time we're negotiating for higher wages. So that's going to push, wage inflation up.
Hmm.
So again, we're going to kind of run across this inflationary pressure, which the central bank can't control. And, are we actually creating economic activity to grow the US, which is really his intention? Or are we going to be like, at a bit of a standstill and just kind of just dealing with this inflationary pressure?
Hmm. Yeah, and I think a portion of it's probably a bit of a power move as well, because the tariffs sound really, really flashy and nice when you say you're going to put tariffs on another country to sort of focus on your own country without getting into the underlying economics. So it will be interesting to see sort of how it plays out. But on that sort of note, I think we rotate a little bit into what's happened in the markets post election. We're now, I believe, almost 2 weeks post election. Um, so sort of where we are, and we have seen the ramifications of the Trump trade, and somebody's going to trademark that, the Trump trade post-election, where we saw the boom across many asset classes, including cryptocurrencies have surged, specifically Bitcoin. You have seen a little bit of a pullback in some of the metals, gold in particular have been a little bit softer, but for the majority of the rest of the assets have been very, very strong post election and post Trump victory. So, Joe, what are your thoughts there on the markets?
Yeah, it was quite interesting. It reminded me of 2016 when it was the first time that he got into the administration, into power, and everybody was calling sort of a market crash. And it was quite the opposite, and we saw that again a few days after him winning the election, that the markets did surge with sort of, the idea of, okay, he's very business pro business. So, and the markets are business. So it kind of makes sense that the markets would look positive. And certain areas too was quite interesting with the cryptocurrency and even in the technology side of things. But we have seen a bit of a pullback in the last few days now. So kind of
Yeah.
maybe a normalization kind of coming back to the realization he does have the power in that the Republicans control both the House and the Senate, so
Mm-hmm.
then he can pass legislation. The question is, what is he going to pass first, and how is that going to look? And then I think the markets would take it from there.
Yeah, I think it's really interesting. I think a lot of people got really, really excited out the gate, and then started to dive into sort of what the economics behind a lot of what a Trump presidency means. There's a lot of weight, I think, being put onto who he's naming into cabinet. You've seen just the appointments of, you've got Elon Musk in there, and then Tesla surges. You had Trump talking about embracing Bitcoin, and Bitcoin surges. And so it's really reactionary to a lot of the decisions that are going on, which is not, it's very 2024 of the markets to be reactionary to sudden news. But when you look at the economics of it, there's the numbers don't lie when we get back to the end of the day. And this could be just a short-lived little blip, as we kind of
Yeah.
see.
And as far as his appointments go, nothing's been settled. These are just proposals. It
Yeah.
will be up to whether the rest of his party will agree that these are good ideas. Because some of the appointments are a little strange, let's say.
Yeah.
Yeah, and it's like anything in the market, right? There's always going to be winners and losers in the market, depending upon the current market conditions, the current economic conditions that are out there, potential legislation that goes through. So you're going to have some winners and losers essentially in all market conditions. And of course, we still have some wars going on here, so
Hmm.
it's not all just focused on the US. There's a lot going on in the world.
And there are eyes on big tech. It's big tech earnings seasons. We've got Nvidia announcing earnings on Wednesday this week, so that's going to be something. I know they've been in the news, and their stock's been falling a little recently with, they've having issues with some of their chips and whatnot, overheating. So, how long can the Goldilocks run of Nvidia go on for before the leader sort of falls a bit. So there's a lot of news and noise, I guess, in the markets, and I think that's what's led to a little bit of the volatility in recent weeks. And so will be interesting to see sort of how we finish off the year. I think overall sentiment is that a Trump presidency will be better for markets, and in the long run. That's not to say we won't have any short-term volatility, but the consensus seems to be it will be more favorable with him in power for the markets overall. But that sort of leads us into wrapping up a little bit of this month's podcast, our second last one of 2024, and we'll lead into, Joe, your financial tip of the month.
Yeah, so as we're recording this in November, November is Financial Literacy Month, and so it's always a good opportunity, and there's always programs that are out there that you can participate in just to kind of understand a little bit more about your finances, the different account types that you can use, how to use it, what the markets do and don't, your risk tolerance and risk profile. So I would encourage people to take a look at the financial literacy in any program in their local area, and to have that as sort of an ongoing learning process for you.
Yeah, so that wraps up our November podcast for 2024 here, episode 9. Make sure to stay tuned for our final episode in December, heading into the holidays. And leave a like, subscribe, rate the podcast on whatever platform you're listening to, and we'll see you next month.